Hey guys, welcome back to the channel. Welcome back to another video. I'm Steve. If it's your first time stopping by the channel, hit that subscribe button. Trust me, you won't regret it. And if you're a returning subscriber, as always, welcome back. Guys, finally, I'm uploading a stock market video. And I know you guys that are some of my subscribers from me doing a lot of my stock videos. I know you're probably like, man, about time. But listen, guys, I want to give you a little bit of in-depth of what I've been doing in the past 4 months that I haven't really said on the channel. I've done some stories on some stocks that I own, but I just want to show you a little bit of stuff in my portfolio that I have done that, you know, I'm really reaping the benefits and rewards from the decisions I made amid what you hear on TV with the talking heads and amongst other things. And I just basically focused on, you know, how I saw the stock, where I see the stock going as a long-term dividend investor. Now, some of these stocks that I have don't pay dividends, and I use them as growth plays in my portfolios. And these 3 stocks I'm going to talk about today, I had brought into them, and I dollar cost average slowly into them. Some of them I made big acquisitions of in the last 4 months, and they're starting to pay off. As we look at the market today, you know, like we had a rally as of last week, and I guess it's carrying into this week. You know, now, my thing is this. I think this is going to be short-lived. We still got to get the inflation down to 2%. You know, yeah, we're moving down, you know, with the Fed rate hikes and stuff like that. But honestly, guys, we still got a ways to go. And these rallies you're seeing, don't put too much faith in them, because 1 or 2 earnings reports on certain stocks, what have you, the market will flip. Ain't no telling what it'll do. But I just want to talk a little bit about what I did. And, you know, it's good to talk about it. The first stock I want to talk about that I've been investing in is Alibaba. Now, Alibaba is like the Chinese version of Amazon, right? You let anybody tell you. It's a big company. Now, we all hear about China. We all heard about, hey, China has they're having a COVID problem. I don't know if I should say COVID. But anyway, they're having a problem with the pandemic and all of this other stuff. Then they had a problem a while ago. I'm just going by what the news said. You'd have thought China is in hysteria, mass hysteria, and it's falling apart. They had problem with real estate, the housing market over there. You remember they was talking about that? Then they were talking about, oh, they're locking people in and all of this other stuff. Listen, this is how I look at it. I look at it 2 ways. First way is this. China's a communist country. China has their way of doing things, even though it looked like it's ass backwards to a lot of other people in the Western world or whatever. You got to remember something. China knows how to balance themselves. They're going to come out of this. America's not the only company that has a functional economy and they're making moves and making waves in the world. China is too, and their economy is growing very fast. I think they got the fastest growing economy out, you know, and they're having a population explosion, I heard. But the bottom line is this. I want to bring this up. In June, I bought, what was it, 10 or 12 shares of Alibaba at $104 a share, because I figured, I'm like, man, it's really looking good. You know, at that price, I felt good at that price, because remember, 2020, it was a $300 stock before all of this, you know, started slowly going down. We started slowly going down into this bear market. So I brought in that 104. And I was like, you know, regardless if it falls anymore or if it goes higher, the buy-in I had with it when it was moving up at that alarming rate, 104 is good for me if it goes up. But if it goes down, that's even better. And what happened early November, right? Stock went all the way down to $64 a share. So what I did was I made a massive transition into the stock. I think I brought like 52 shares. Plus the 10 I had, which brought my cost basis down, right? So when my cost average. So now I'm under $100 with where I'm at. And today, looking at Alibaba, it's like $119, $120 a share. So every share I have, I made money off of it from the cost base, you know, and you put that at what, 61, 62 shares? You got to feel good about that. I mean, my basis was this. Listen, China going to turn around. Yeah, the problems might persist now, but it's a functioning country that knows what to do. They got a good government that has money that's going to bail them out on any type of thing. Listen, another thing is China don't want to lose face in the world. They don't want to lose face. So they're going to rectify that situation. And they don't want the embarrassment. Because you got to remember, these countries compete against each other. Certain things they want out, certain things they don't want out. So it's like we always got to remember that, And so I brought in at Alibaba when it was like $64, $65 or something like that. I don't have it in front of me right now, but listen, I feel good about the decision. Another thing about it, Alibaba, the last 3 quarters, they've been beating the quarters. And that was one of the things. I'm like, man, they beating all the quarters and everything falling down. Because you remember, all the Fed speak, the hawkishness of the Feds, raising the interest rates, regardless of what country it was in, all the stocks was going to fall. I was paying attention to it because I see a good future with Alibaba. 10 years from now, this is going to be a power. I mean, it's a powerhouse company now, but I think it's going to be in very good position. That's why I brought in at 104. At 104, I don't think it's going to be 104 10 years from now. It'd be exponentially higher than that. So right now, I feel good. Now, this is the next one I want to go into. Meta or Facebook. Remember when they had the last earnings call? Meta bombed. Everybody was like, oh, talking heads on TV and stuff. Remember in the market they spread fear and greed and stuff. Watch this. Meta fell. I made a video. You guys can check it out about how I wanted to buy in the Meta. Bought in the Meta. I mean, the stock fell bad. Like, I mean, it was under what? $90 a share, I think. Because I wound up buying in. I made a big deal of that. Because I sold some of my AT&T shares at the time to buy the Meta. And I wound up buying 76 shares at like $91.44 or something like that. And I just sat with it. Now dollar cost average into it, a couple of dollars over the $91. And then I stopped. Looking at it now, it then took off. In fact, let me look at this real quick. Let's do this real fast. Let's go to Meta. What's Meta today? $143 a share. So I brought in at $91 and already profited off of the 143. It's simple, guys. Trust in what you believe in. You like a company, you know what I mean? Do your due diligence. Now, I'm not telling you just buy something you like because of the name of it, but I mean, as a growth play, Meta looks good to me. I want to see in 10 years how this metaverse interacts with society. Because, I mean, a lot of the stuff that they're talking about that you can do or what they're trying to do in the future as far as how the metaverse works, I like it. I think it works for me. So I made the investment. So I brought in at $91.44 and I feel real good at sitting at $142 a share now. In the situation where we are, and we talking about the great wealth transference, things like that, this is what they talking about. If you're smart enough and patient enough to buy in at one of your favorite stocks at the time that you want to get them, you know what I mean? All you can do is go up. Now, am I saying these are going to stay high like this? No, and I hope they don't. See, one of the misconceptions we have in the market is you want to buy the stock and you want the stock to go up. If you buy a bona fide good company, dividend aristocrat, good growth stock, and you buy it when it's down, you want it to keep going down. You want the news to be okay, and you want the company to be all right. Because a lot of times the stock price don't really have nothing to do with the company. You want the price to go down, right? Especially with these economic conditions where everybody's scared and they selling their stocks. When they sell their stocks, what the rich do, they buy them up. I'm only following suit. So you want the stock to go down. $91.44. Meta go down any further? I'm all over it. Will they make the next earnings call? And when is that? February 1st? The next earnings call, February 1st? Will they make the next earnings call at February 1st? We'll see. If they fail that, a lot of people that are jumping on it right now going to jump right back off, and it goes right back down to where it was. Guarantee you. All the Fed got to do, are we going to come out and they get hawkish? hey, we're going to go another 75 basis points on a rate hike. What's going to happen? Everybody going to be like, jump off. Boom. I'm telling you, this wealth transfer coming is going to be big. Some people say it's going to be the biggest wealth transfer ever in the history of stock market investing. I want to be a part of that. Hopefully you guys want to be a part of that too. That's why I tell you, anybody out there that doesn't have a investment account, it's easy to get. Don't cost you nothing. And this is the best time to do it. Everybody says they want to invest when they have a next market crash. But a lot of people ain't paying attention to what's going on. This is the time you want to invest. Now, am I telling you to buy stocks or anything like that? No, I'm telling you, at least have your account set up and start learning about the stock market and investing and how it works for you on your journey and where you want to be in life going down the road. I mean, that's one of the things I like about the stock market. It changed my life and it can change anybody else's. But listen, let me get back into this thing. I'll be rambling. I'll be going off. Listen, the last stock I'm going to talk about is something I recently acquired since the last split. And I've been enamored with it and I've been buying heavy into it. Most of my money has been going into this. This is Tesla. Now, a lot of you guys have been with me for a long time. You know I like Tesla. I've liked Tesla for a long time, but I was scared to touch it because a lot of the negative sentiment that you heard on TV scared me away from it, and I missed out on a lot of gains. Tesla makes millionaires, folks. They got unparalleled technology, and moving into the future, they're set in the position to be a leader in a lot of different spaces, you know, and they got things they're working on that we don't even know about. And they're backed by Elon Musk. As crazy as he is and some of the stuff he does, people don't understand, but the man has a fan following, and so does Tesla. And I wanted to be a part of that. Listen, right now I sit at 227 shares of Tesla. And I've been buying Tesla since Tesla was like, what, 400 something, not 500 something dollars? Well, less than 500 something dollars. And I've been buying into it post-split, right? Big increments into it. I got 227 shares right now at a cost basis of $123 plus some change. So as it's been falling, you know, I've been buying like 10 shares here, 10 shares there. Then we had these big drops with it. I waited a little bit. You know, you can see my other videos and check them out. I've waited a little bit, tried to get down to 120, tried to get down to 100. If it had got to 100, got all the way down to 103. Luckily, close to 103, I pulled the trigger. Massive trade, boom, brought the cost basis down. But listen, guys, with Tesla, this Wednesday coming is their earnings call. Now, supposedly they had halted production in the Shanghai plant and all of that. A lot of people don't know what's going to happen with these earnings. I think the earnings are going to be good, but in any case, if the earnings are good or not, and I'm hoping they're going to be good. Well, I'm saying they're going to be good, but it's a possibility that they won't be. Something might be off, either the logistics getting the deliveries out, or I don't think that they're going to have a problem with production or anything. If this has anything negative with it, there's a lot of people going to run from it. But you know, Tesla's very unpredictable. Like right now, looking at Tesla, right? Today, we'll look at Tesla. Tesla's at 142. 142 today. Now, what was it a month ago? A month ago, today, the stock was sitting at $123. Just $21. It done ran back up. Tesla is jumpy in the market. And you know, as we transition into the bull run, whenever time that is, because another thing that I think is good news, and it's possible. Now, I'm not going to say it's going to happen. No, I don't know. I'm just some guy on YouTube that talk about stocks, got a nice portfolio, and just tell you about my journey in investing. But check it out. Tesla is going to be one of those stocks moving forward. When we go into the bear market where the stocks just run crazy, it's going to be in the forefront. It always is. And people are going to pile on. The reason why you see the stocks growing right now as a present, all somebody got to do is say, yeah, I see Tesla doing this, or just somebody of any significance in the financial world say something good about Tesla, and everybody piles in on it. It's almost like a religion. And I feel real good that I brought in it when I did and made the massive acquisitions of those shares that I did at that time. Because I mean, I spent a lot of money, guys, on these shares, and I'm glad that I did and got my cost basis down so low, because I see this stock going back up to $500 easy. And there's one more thing, I've just been rambling. I'm sorry about that. It's one more thing. They're saying that we, at the end of 2023, we could get down. They're hoping, the Fed, this is the Fed, the Federal Reserve is saying they're hoping to get the inflation rate down to 3-4%. I think if we get to 3-4%, especially 3.5%, you'll start to see the beginning of the bear market in the stock market with a bull run. I don't want to say bear market. The bull, we'll start to see a change. A lot of people ask me, hey, when you're going to see a change? You'll start to see it when CEOs start having better sentiment, talking about consumer sentiment. When the consumers start, spending starts to ramp back up. I mean, there are obvious signs. All you got to do is pay attention. The price of food to start going back down and things like that. People will start buying homes again. You'll start to see apartment rentals go back up. So on and so forth. Car sales will go back up. But listen, getting back to Tesla, man, Tesla's in good position. They already offered incentives and took money off of deals to stay competitive during this economic times in 2023. I think they set for success. Tesla Semi is on the road as of December. So from this December that just passed until next December, the numbers will be out and all of the research and statistics of how it's doing on the road. And I think it's going to be positive in the logistical field. So with that being said, guys, leave me a comment, man. Tell me what you guys been doing in the last 4 months. If it's some things that you've been setting yourself up ready for this bull run. Do you think inflation is going to get down to 3.5 or 4% like the Federal Reserve says at the end of 2023? Guys, let me know, man. I'm sorry I ain't had a stock market video in some days, but I mean, I'm still Stock Market Steve. You know what it is. As always, like, comment, share, and subscribe, and I'll see you guys in the next video. Take care.